Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. Swing trading is a game of probability. Once we identify a trade where more and more edges are in our favor, that does not guarantee that it will make a profit, but it increases the probability more and more. And sometimes a trade that we think will do better may not do as well, whereas another trade, same 360 degrees trade, may do better. Overall, so long as we follow a systematic approach like the 360 degrees trading ideas, the trades will make more profit than stop out, and overall it is expected to make a nice profit. I'll look at some of the stocks I shared on Twitter recently and show how they played out eventually. Some did well, some did much better. I'll come back to that later. Greetings, I'm Sagar Nandi, retired IT professional, swing trading stocks in India and USA markets using only one trading system, Q, that I developed myself. These are my contact detail and the social pages where I share live market and stock analysis. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. My aim is to keep these sessions to 30 minutes. So I am not using prepared slides, moving to the live systems directly. Instruments that often move the market. Dollar index. It is in a downtrend. In the previous market recaps, I mentioned that I would not be bullish unless the downtrending trend line could be broken. It could not be broken. It held and price fell sharply. Now it is at the trend line support with an indecisive shape candle, and it is at jump thrust low. There is a possibility that this support will hold, and if that holds, then there is a reason to be bullish on the dollar index. Dollar index recently had not maintained its inverse correlation with the market, so it is less useful for swing trading nowadays. However, the other market level instrument, Megacap Custom Index, is as useful as ever. Here, the tough nuts to crack trendline supports held in both weekly and daily. Looking at the trendline supports, you could look to buy the strongest of the mega caps right when price was reversing from the trendline support, because it was bouncing up from trendline after hitting jump thrust low. It would be a very low risk trade, and eventually of course it gave much higher risk, much higher reward than risk taken in the trade. And the preferred instrument in such a case of bounce reversal trade would be, for me at least, short put vertical, that would benefit not only from the price move in our intended direction but also from the volatility crash. At the right edge, it is inside a triangle pattern. See, I am trying to buy near the low of the triangle pattern, but now it is near the high of the triangle pattern, and that is not a point where I would like to buy. I will wait for it to break out of the trend line resistance before considering buying. So Megacap Custom Index is saying that wait before buying. Market breadth internal health check. Usually the market follows the internal health, not the other way around. The broadest view of the market breadth total view, when price came here, the 3-month new high low was extremely oversold, and the percentage of stocks above 50-day moving average, the yellow line, was also extremely oversold. So much so that a bounce up was likely, and the bounce indeed happened. And some people commented when I was discussing with them that it bounced because of some tweet from the USA president. Yes, that is true. And something like that invariably happens when we hit the extreme oversold situation in either or both of the indicators. As you can see, the 3-month new high low oscillator oscillates much more than the percentage of stocks above 50-day moving average, and therefore when the percentage of stocks above 50-day moving average is also extremely oversold, a likelihood of bounce is much more, and we had the bounce. What did we have prior to the bounce was also important. It showed a series of bingo, that is throwing baby out with bathwater, indiscriminate selling signal. The signal was developed by Mr. Ian Woodward, may him rest in peace. That was also showing that a bounce was likely, and eventually the bounce came. The bounce came with very much bullish accumulation, 6 count. Is it time to buy? If you followed me on Twitter, you would notice that I did not buy on this day because I was waiting for a bullish close, as I mentioned in the previous market recap. But by the time we had the bullish close, the direction was still in a downtrend. Let's see that from at a glance of the total view. When this bullish close happened, it did not change the downtrend. It was still in a downtrend, and it is still in a downtrend with lower high, lower low. We have trend line resistance, no trend line support, clearly in a downtrend, and it came too close to the trend line resistances. Stop would be very far away. So yes, a bounce came from jump thrust low. It came with big move up 3. However, what we did not have was a low risk entry point, and that was why I did not buy on this day. I did buy some stocks earlier, and I tweeted about some of those stocks. That is what I'm going to look at later. Now it is still in a downtrend. The total view at a glance does not allow me to buy. I'll wait for the total view trend line resistance to be broken, and if that happens, I may look to buy. I'll not look at Nasdaq, NYSE, or the major indexes. They give more or less the same signal, telling that market recovered from a downtrend, but it is not a time to buy because the low risk entry points are not there. Let's look at the external view. This is how most people around the globe see the market. You could use ETFs or futures or indices. Let's use ETFs today, SPY. When price came here in weekly, we had a trend line support, and this is what I mentioned in the last market recap, and that is how you get ready to buy. I mentioned that the trend line supports were already there. What I was expecting was for price to drop and for these trend line supports to hold to start buying, and I started buying when that happened. I did not buy on this day, but I did buy at this point. Not SPY, but some other stocks. I look at some of them. At the right edge, though the bounce happened, it is remaining in a downtrend. It is also inside a triangle pattern, and it is right in the middle of the triangle pattern. That is not a place I'd like to buy. QQQ. Very similar pattern. Here I talked about the watermark holding in weekly. It created a false downside breakout that was even more bullish, but now it is still in a downtrend. I'll have to wait for the trend line resistance to be broken before buying. Dia, once again I was ready to buy if the trend line support in weekly daily held. They did hold, and you could buy. I did buy right at the bottom. I did not buy at the close of this day. At the right edge, again, it is right in the middle of the triangle pattern. That is not a place where I would like to buy. Lastly, IWM. Weakest of the market ETFs did not recover that well. The backdrop color in weekly is remaining bearish. So if at all I am going to buy now, this will not be the pocket to look for buy. Bucket analysis pinpoints reversal points with remarkable accuracy. I started using this and few other techniques after watching Dr. Jeffrey Scott's videos. Thanks to him, this works with remarkable accuracy. It becomes extremely oversold when the percentage of stocks in the lowest bucket hit 30 to 40%. It hit an astronomical more than 80% recently, and that was the time that you could, and I did, start to buy stocks that were holding better than others, and all those came together, bucket being extremely oversold, market being extremely oversold in terms of jump thrust low, and then the trend line supports holding in multiple market instruments. That was the signal to start buying, not after the market rallied. Now you can see from huge 80% stocks below lower Bollinger Band, only 1 point something percentage are below lower Bollinger Band. So a lot of stocks recovered from the low. They fell below lower Bollinger Band, they recovered, but not recovered a lot. Why? I say that because 83% of the stocks are still below mid Bollinger Band. So it was a recovery in a downtrend, and we could see the downtrend in all the market level ETFs. We could see that in the total view custom index too. If I look at the sector industry stock breadth from 1 month to 1 day, longer term 1 month is bearish. So we are in a downtrend. Longer term 10 days is also bearish. 5-day turned bullish, but today again turned bearish. 1 day turned bullish on Friday. So it is flip-flopping from red to green to red to green. If the flip-flop continues, we may see a down move next. that will coincide with the market reversing from trendline resistance. That will not be a time to buy. On the other hand, if the green color continues next week, that will break the trendline resistances in multiple market instruments, and that will be a time to consider buying. Technical breadth is very important because we can only profit buying stocks if they go up, so technicals are important. Let's look at the weekly breadth first. Very bullish. It was extremely oversold earlier. That was the time to start to look to buy, and during the week it started turning bullish. Now it is looking very bullish across the board. On top of that, the headwind alert is saying that the up move is likely to continue, at least for the stocks that were at a very low price level in weekly. In daily, all the categories are green across the board. It is still extremely oversold in terms of technical breadth seen from jump thrust alert, and here also we have a bullish headwind alert showing that the up move is likely to continue. So there is no reason to look for bearish trades right now. I look for bullish trades, but I will prefer that the trend line resistances be broken. The most important trading decision is whether and where to buy or short, or whether to stand aside. So what is that conclusion today? I will rather wait to see that the trendline resistances are broken before buying, and if it dips from here, that will come down from trendline resistance in a downtrend. That will be a time to look for low risk shorts. Which pocket? If I am buying, I will prefer to avoid small caps. Small cap IWM is the worst performer, and if I'm shorting, I may look to short small caps. As of Friday's close, I am not going to buy, not going to short. Last week's trade ideas, I did not share any trade ideas in the last market recap. During the week, I tweeted a few stocks. Two to be specific. Let me look at them. Neither of them had a 360 degrees buy setup. One was Pitney Bowes, and see how I chose the stocks. I was looking for market to come down and hold support, and while that happened, I was looking for stocks to come to support and hold support. PBI was one such stock. I tweeted, it has majority of revenue coming from the USA. So it was less prone to be affected by tariff discussions. So that was what I thought. I bought it, though it did not have any 360 degrees buy setup using weekly daily charts. It could be bought, and I did buy it using precision entry fine-tuned chart. And as price came to this level, I already booked profit. I did not let profit erode. It is holding the support, but looking at the trendline resistance and that it failed to break the trendline resistance, I am less willing to buy now. Again, I could use the precision entry chart, of course, to buy it if I see its industry is also doing well next week. So this was one stock I shared a bullish view on Twitter, and I bought it and I traded it with profit, but not a lot of profit, as you can see. On the other hand, the other stock that I shared, that also did not have a 360 degrees buy setup, that also had majority of revenue coming from the USA, that was Lockheed Martin. And see the similarity. Again, I looked for a stock that was holding support. I bought somewhere here, and it went up much more than PBI. The day when I analyzed and shared LMT, Lockheed Martin, that day defense stocks, it is a defense industry stock, defense industry was probably one of the only few industries that were up. So that led me to buy the stock even though it did not have a perfect 360 degrees setup. When I shared LMT, I shared another, I did not share, but I found another stock in the same defense industry and see the similarities in these stocks. L3 Harris or LHX. Again, as market held support, LHX also held support. I bought it at this point. As price went up, I booked profit. So what I mentioned earlier, that I am trying to look for stocks with as many edges as in my favor, and some do better than others. LMT, LHX did better than PBI. I could book some profit in PBI also, but I would not mind if I had to book loss in some of the trades. The probability eventually works out in my favor because I try to align more and more edges with my trades. Let's look for some buy candidates today. I see a note from Dr. Jeffrey on icon. Q types is continuing to work on workspace. I am working on it. It is not complete yet, but I am confident that by the time workspace is generally rolled out, Q types will work and it will be faster. Uh, for those who are using Dives, you already know that icon is being upgraded to workspace. The deadline for that is still far away, 30th June. We still have enough time before that. As it is, QDives programs were not working on workspace, but I'm noticing that as days go by, Metastock and LSEG are working together to make them more and more compatible. Workspace has some advantages. It is much faster than Icon. It has some limitations also in terms of data access. So I'm trying to fine tune Dives to retrieve less data, only the essential data. I'll try to release that updated version before Workspace is generally rolled out. Back to today's market recap. Let's look for at least one stock, and I could do a top-down analysis. Let's do that using live systems. Let's go to the market. We already saw I prefer to buy at the market level. Of course, I'll be happier to see the trendline resistances broken. Having said that, let's go to the industry scorecard. Find the industries that are either strongest or most accelerating. And let me generate a scorecard for the liquid stocks also. I could drill down into the Q edge stocks, that is S&P 1500, but not all S&P 1500 stocks are as liquid as I like them to be. So I have this list of about 2000 highly liquid stocks. I like to find trade ideas from there. So give me a few seconds, and you see it takes a moment to generate the scorecard in Icon. On Workspace, I expect it to be much faster, and that is uh, one reason of that is Workspace itself. Other reason is I'm going to limit access to data. What does it mean? Meaning in the stock panel, if I go to the stock scorecard, we have the vital panel that we usually see and use. And then if I scroll to the right, there are performance panels, growth panels, fundamental information, etc. Those we hardly use because Workspace has limitation on how much data one can retrieve as a retail customer. I'm going to omit much of the unnecessary data or the data that we hardly use and focus on the vital statistics. That will make it faster. In any case, the data has been retrieved. Let's go back to Edge. These were the strongest sectors, strongest industries. Let's drill down into the stocks, look for only stocks up at least 1%, look for stocks with at least 1 star, that is either undervalued or with high growth. Shall we try 3 star? Still we have enough number of stocks. Let's see out of these 48 stocks which ones have possible trade setups. I could look that up from Q Finder. These are the few stocks. Why don't we look at them using Q Elite one by one? I could use Q Global Metastock also. Let's use both of them. Okay, first one CERT up 22%, and also it has a trendline resistance. You may see there. I'm not interested. I'll scroll through them quickly, and if something is interesting, I'll stop there. YPF has a bullish headwind but still very much downtrend, not interested. RGNX weekly is very much down in the pattern. Weekly is red color, not interested. NE weekly red color, indecisive candle shape, not interested. VET, see what I'm doing, I'm trying to find reasons of not buying, and if I find any reason for not buying, I'm not continuing with the analysis, not trying to justify why I should buy. I'm saying why I should not buy. If I don't find enough reasons not to buy, I may consider buying. This one is VET, weekly bearish color, indecisive shape, not going to buy. Next one, VAL, VAL, again weekly bearish, indecisive color, not interested. Illumina, ILMN, here weekly is better, not bearish color, the shape is not so indecisive. Daily has a bullish headwind but also has a trendline resistance. I will not buy it as of Friday's close, but if it breaks the trendline resistance, I may be interested because it is at jump thrust low, price extreme low, it has a big move up 3, has a bullish headwind. If it breaks the trend line resistance in daily, and if that brings me back to the watermark support in weekly, which will then create a false downside breakout, that may be a time to consider buying. But looking at the next trend line resistance, if I buy it, I'll have to buy it using precision entry real-time chart. So not a good looking chart as of this analysis. Next one, this one is looking much better. SEACMR. This has a pattern that I used for PBI, that I used for Lockheed Martin, that I used for L3 Harris. All of them were bullish trades when the market did not rally yet. That did very, very well overall. I like this one, SCMR. Weekly found support, daily found support. So I will come back to it. Let's see if any other stock is of interest. ADMA, trendline resistance in daily, not going to buy now. CRGY, weekly bearish color, indecisive shape, omit. Next, CX, weekly has support but the color is bearish, shape is very indecisive. Next one, CPRX, I like this one. Notice the similarity between CPRX and SCMR. Both of them have nice support in both weekly, daily. So let me keep CPRX also. Next is MRK, Mark. Weekly not appealing enough for me, and Pfizer, both in the same, also similar. So I'm left with ACMR, ACM Research. Stop would be below the low here, but we have open space up, so reward may be higher, at least maybe to the yellow direction line that is declining. Of course, in this market many stocks would be declining. On a longer term, you may think that it is in an uptrend because it has weekly and daily trend line support. ACMR and CPRX. I think they will be in different industries here. CPRX is pharma, ACMR is semiconductor. This has a similar pattern. Let's look at their fundamentals. Generate the one-page scorecard. ACMR. I like it. The moment the data is retrieved and the scorecard is filled up, I like it. Great valuation, high earnings growth, improving earnings growth, improving revenue growth, funds are accumulating. It's a profitable company. 91% of stocks in the peer group semiconductor industry went up. If I look its relative score, it is one of the most accelerating industries and it is bullish. So acceleration allows me to buy. The industry is up by more than 2% on Friday. So one stock I found was ACMR. The other one was CPRX. Let's generate the one-page scorecard for CPRX. This one is also, of course, it is 3-star. That is what I selected. It has something interesting. Many things similar to the semiconductor stock. So this is not a semiconductor stock. It's a biotech pharma stock. It is also undervalued with high earnings growth. Here also funds are accumulating. One thing that we have in CPRX that we did not have in ACMR is that it's a box stock. Box stock means it is not only high earnings growth in the recent quarter, but in long term also it has high earnings growth. That was a classification used by Mr. Ian Woodward again. Thanks to him, may him rest in peace. This industry was also very strong on Friday. 94% peer stocks were up. And if I look up the relative score, this is not only one of the most accelerating, but it is also one of the strongest. So both are very similar technically, fundamentally both are strong. They of course are in different industries, but if you ignore that, there is no reason to ignore that in real life. Just for the sake of explaining the Q 360 degrees analysis, if we ignore the industry differences, then CPRX will become slightly better choice because it is a box stock that ACMR is not. But of course, we cannot ignore the industry. Both of the industries are strong, so both are possible buying ideas. However, as I said, for me, the market level is not allowing me to buy. So what to do with these stocks? If the market opens down next Monday, tomorrow, and I see that CPRX opens down, maybe even break the trend line support but regains it, creating a false downside breakout in real time. I may be able to buy even at a lower price. The same will be true for ACMR. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would find in any other day. Slightly above 30 minutes. I'm going to keep trying. Thanks a lot for attending. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples, I'm quite confident shows that if you manage risk, if you follow a disciplined approach and not get too much affected by what is coming in the news, even if it is tweets from Mr. Trump, President Trump, you will be able to make reasonable profit from the market. At least that's what I believe. No reason not to do that. Thank you again. Have a great weekend.